Ever wondered how to make your money work for you? Well, you're not alone. Welcome to the fascinating universe of investment strategies, where your dollars can learn the art of multiplication. Today, we're going to explore 3 key strategies: value investing, where you buy businesses, not just stocks; growth investing, which is essentially betting on the future; and dividend investing, the financial equivalent of a gift that keeps on giving. Ready to dive into the world of investments? Buckle up, it's going to be an interesting ride. First up, value investing. Think of it like bargain hunting, but for businesses. It's not about buying cheap stocks. It's about buying businesses that are undervalued. Value investors are like the Sherlock Holmes of the investment world, seeking clues to find the intrinsic value of a company that the market may have overlooked. Imagine you're at a yard sale and you spot a dusty old painting. To the untrained eye, it just looks like some old artwork, but you recognize it as a lost masterpiece worth thousands. That's value investing in a nutshell. You're looking for those hidden gems in the stock market that others have undervalued. Let's delve a bit deeper. You see, every company has what's called an intrinsic value. This is the real, true value of a company, determined by factors such as its assets, earnings, dividends, and growth potential. But sometimes, due to market fluctuations, a company's stock price can fall below its intrinsic value, and that's when value investors swoop in like savvy shoppers at a sale, snapping up those stocks at a bargain price. But remember, value investing isn't a get-rich-quick scheme. It's a long-term strategy. Value investors are like marathon runners, not sprinters. They buy and hold, patiently waiting for the market to recognize the company's true value and for their investment to yield significant returns. And just like in a marathon, you need to be prepared. It requires thorough research, patience, and a keen eye for value. You need to understand the company, its business model, its competitive landscape, and its future prospects. It's not just about the numbers, but about the story behind the numbers. So value investing is like buying a Ferrari for the price of a Ford. Sounds like a deal, right? But remember, it's not just about finding a cheap stock, but about finding a great company at a fair price. It's about seeing the value where others don't, and having the patience to wait for the market to catch up. So, are you ready to go bargain hunting? Now let's talk about growth investing. This is where you're betting on the future. Imagine you're at a horse race. You've got your eye on a young, sprightly horse. It's not the strongest or the fastest, but it shows a spark of potential. You decide to place your bet on this horse, banking on the hope that it will outpace the rest in the long run. That's what growth investing is all about. Growth investing is a strategy that focuses on companies that are expected to grow at an above-average rate compared to other companies in the market. It's like betting on the underdog, the young horse, because you believe in its potential. But just like at the horse race, this strategy comes with its own set of risks and rewards. The upside is high potential returns. If the companies you invest in do well, your investment could multiply in value, providing a significant return. It's like your horse turning out to be a dark horse, overtaking its competitors and winning the race. But the downside, the risk, is equally important to consider. These companies are often in the growth phase, which means they might not have a track record of profitability. They might be burning cash to fuel their growth, which can be risky if the growth doesn't materialize as expected. It's like your horse tripping and falling, or simply not having the stamina to finish the race. That's why market research is crucial in growth investing. You need to study the company, its industry, and its growth prospects. You need to understand the risks and whether you're comfortable taking them. You're not just betting on a horse because it looks good. You're betting on it because you've studied its form, its past performances, and its potential. Remember, growth investing is not a get-rich-quick scheme. It's a strategy that requires patience and a long-term perspective. You're not just betting on a horse to win one race, but several races over time. Growth investing is like planting a tiny seed today and watching it grow into a giant tree. Patience is key. Last but not least, let's discuss dividend investing. It's like getting a gift that keeps on giving. Imagine if your birthday was every month, and each month your rich Aunt Mabel sent you a check. That's dividend investing in a nutshell. It's like having an Aunt Mabel in your life. But instead of a rich relative, you've got stocks in companies that regularly pay dividends to their shareholders. Now you must be thinking, isn't investing all about buying low and selling high? Well, yes, but that's not the only way to make money in the stock market. Dividend investing is a strategy where you invest in companies that distribute a portion of their earnings to shareholders. That's you, in the form of dividends. Think of dividends as a thank you note from the company for your faith in them. And the best part? These thank you notes come with cash. You see, when you own dividend-paying stocks, you get a steady stream of income, just like your monthly paycheck, and you get this whether the market is up, down, or sideways. Now that's a gift that keeps on giving. But wait, there's more. You can choose to reinvest these dividends back into the company by buying more shares. This is what we call a DRIP, or a dividend reinvestment plan. It's like rolling a snowball down a hill. As it rolls, it gathers more snow and becomes bigger. Similarly, reinvesting your dividends can lead to owning more shares, which can lead to larger dividend payments, and so on. It's a virtuous cycle of growth. So, what's the catch? Well, dividend investing is a long-term strategy. It's not for those looking for a quick buck, but if you're patient, it can provide a solid foundation for your financial future. Plus, it's a great way to earn passive income. In a nutshell, dividend investing is like planting a tree. Initially, you need to nurture it, but over time it provides shade, fruits, and continues to grow. It's the gift that keeps on giving. So, dividend investing is like getting a regular paycheck even when you're not working. Sounds good, doesn't it? Now that we've discussed different strategies, let's talk about a golden rule: diversification and asset allocation. Now you might be wondering, what on earth are these financial jargons? Well, imagine you're at a party, and there's an appetizer table filled with a variety of delicious treats. Now you wouldn't just load up your plate with only cheese puffs, would you? I mean, cheese puffs are great, but you'd miss out on the spinach dip, the sushi rolls, the mini sliders. That's diversification in a nutshell. It's all about spreading your investments across a variety of assets. This could mean different types of stocks, bonds, real estate, or even commodities like gold and oil. The idea is to not put all your eggs in one basket, or in our case, all your cheese puffs on one plate. But why, you might ask, is diversification so important? Well, think back to our party scenario. If you only ate cheese puffs and then found out they were a week old and spoiled, your night of fun might quickly turn into a night of, well, let's just say it wouldn't be pleasant. In the financial world, this is akin to investing all your money in one company or one asset class. If that company or asset class takes a hit, you could lose a significant portion of your investment. Diversification helps to spread out that risk. Now, asset allocation is the process of deciding how much of your investment portfolio to put into different asset classes. This is like deciding how many cheese puffs, sushi rolls, and mini sliders to put on your plate. It's a balance between risk and reward, and it's based on factors like your financial goals, your risk tolerance, and your investment timeline. So, just like you wouldn't fill your plate with only one type of appetizer at a party, you shouldn't fill your investment portfolio with only one type of asset. Diversify your investments, allocate your assets wisely, and you're on your way to a more secure financial future. Remember, diversification is like a buffet. A little bit of everything can make for a satisfying meal. So, there you have it, a quick tour of the investment world. We've navigated through the bustling streets of value investing, where we learned that we're buying businesses, not just stocks. It's a strategy that encourages us to look beyond the price tag and instead evaluate the intrinsic worth of a company. It's like a treasure hunt, where the treasure is an undervalued stock that's ready to shine. We then took a leap into the future with growth investing. This strategy is all about betting on companies that show potential for explosive growth. It's like backing the underdog in a race, relying on their potential to outperform and surprise everyone. Next, we unwrapped the gift that keeps on giving: dividend investing. This strategy focuses on investing in companies that regularly pay out dividends. It's like having a birthday every quarter, where your gift is a slice of the company's profits. Finally, we learned not to put all our eggs in one basket with diversification and asset allocation. This strategy emphasizes spreading investments across a variety of assets to minimize risk. It's like creating a buffet plate of investments, each adding a unique flavor to your portfolio. Each of these strategies plays a critical role in making your money work for you. They offer different paths to the same destination: financial freedom. Remember, investing isn't a sprint, it's a marathon. So, lace up your shoes and start running at your own pace. Don't forget to like, comment, and subscribe to our channel. Click on the left to watch more videos about investing. Happy investing!